Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the Tweezer tops candlesticks pattern. I have charts. So tweezers are a pattern found in technical analysis of options trading or regular trading. I don't know why they have it specifically for options trading. That's interesting. Tweezer patterns occur when two or more candlesticks touch the same bottom for a tweezer bottom pattern or top for a tweezer top pattern. This type of pattern can be with candlestick charts of various types. Breaking down the tweezer. Tweezer bottoms are considered to be short-term bullish reversal patterns. Tops are bearish in either end, means that buyers or sellers were not able to push the top or bottom any further. Both types of patterns require close observation and research in order to be interpreted and used correctly. So I'm going to show you several different examples. If you have ever taken a look at the candlesticks course, they like to recommend that the first candlestick needs to be a longer bodied, real bodied one, then the second one needs to be short bodied. But you're not going to see, like this doesn't say here on Investopedia. So you got to look at, several different types. Look at basically two highs. A stock makes a high. The next candle can't break that high, so it's a potentially bearish signal. Obviously, doesn't mean 100% of the time it's going to reverse, but a lot of times that it does. So I'm going to show you again several examples. So let's go and take a look at Ford. We will go over here, F. You're going to see here, this is a really nice looking one right here. Big green real body right here, forms a top, right? And then you're going to see the second real body here, or the smaller candlestick here. You see, if I do a drawing right across here, if you look, they have the same top. Now, this is where we tell people don't get bogged down too much in the minutia of things, because sometimes you might get a wick that might be a tiny bit taller than this other one. That doesn't mean it can't be a tweezer top and can't reverse. So it's never going to be like 100% exact. Sometimes you'll see a great pattern like this, but a lot of times it'll be very, very close. Like, give you an example of something like this one right here. Not saying this is necessarily a tweezer top pattern, but give you an example. See how this wick right here just gets a tiny bit taller than this one, right? That wouldn't negate, let's say that was like at the top of an uptrend, like up here, right? Let's say if this pattern was up here, that wouldn't negate necessarily it being kind of like a tweezer top or a potential, reversal downwards just because of that. So, keep an eye on it. Again, you're going to see patterns all the time. A lot of times they're going to be very, very similar, but don't discount them because, everything isn't always perfect in the trading world. This is a really nice looking tweezer top right here. But again, we're going to show you several examples here. All right, ABIO. This is almost like utter perfection right here. This is probably about as perfect as you can get, right? Real long body right here. Got the kind of the wick up top, right? Perfectly flat base right at the top. I mean, this is a perfect looking one. Now, you're going to see with this chart, this is very interesting. You're going to see like lots of tweezer tops all over the place over here. You can see one. So let me just draw a line here, right? So there's a top right up there, right? Or perfect tweezer top, flat, base up top there. I'm not going to put a ton of drawings on here. Look over here. Here's one right here. Look at this drawing where you can see, boom, look at that. That's a tweezer top right there. Perfect kind of flat top. Stock made too high, this candle right here can't break this high, but this candle is obviously bigger than this candle. Doesn't mean it's not a tweezer top, so it's not. The first candlestick wasn't the long one. The second one was. Again, still a tweezer top, right? So let me just remove this drawing here. Right here, tweezer top. See that right there? This must be like a manipulated stock of some sorts. They're just like, I pulled this up here and you can see just like a bunch of tweezer tops on this chart. I mean, they're all over the place. Look at it, like tweezer bottoms. Like, see this? It's just like whatever. This is some, I don't even know. I don't know anything about this stock, but it looks kind of kind of garbage. Let's take a look at Netflix over here. You're going to see kind of a smaller one. You can see here the candlestick. I mean, it's still big real body, but not a really big one. But as you can see here, Bigger green candlestick. A smaller one couldn't break. If you look here, I'll pull up my handy drawing tool that I like to use. You can see those two little wicks almost like right at the same peak. Right here, stock's moving up. Couldn't break this previous high, and boom, it fell. Doesn't mean it's always going to fall, but again, they're pretty reliable pattern. So potential reversal top pattern, right? So that is one for Netflix. Let's take a look at Citigroup. C here. This is a really nice looking one, and this one might be one. Look at that. So perfect example. Like it's almost, so right here you can see the circular, bigger green one, smaller red candlestick. But just to give you an example, like that's almost perfect, but that red tiny wick is a tiny bit above that green one. So that doesn't negate that being a tweezer top. You see what I'm saying? This is a perfect example of where you can see something that's not like almost 100% exact. You see there's like a tiny bit of spacing in between the top of that green and the top of that red candle wick. It's still a tweezer top, so again, don't get stuck in the minutia of things of it having to be 100% perfect. Look at what's happening. Uptrend, stocks overextended on the RSI. This green candle made a high, and the second one couldn't break that high. It just did for a kind of a second there, and then it reversed, right? So this is where we tell people, look at what's happening, look at the pattern, look what's happening in the overall uptrend or downtrend, whatever's happening. Basically, look at the charts, look at the other indicators, then look at the pattern, what it's trying to tell you, and this is saying, hey, this stock's overextended. There needs to be a potential reversal coming pretty soon, and as you can see, there absolutely was. Let's look at John Deere. Okay, so here's a couple bigger. I'm going to change this here to up top. And as you can see, stock move up, big green candlestick here. Another green one created a high up here. And as you can see, that second candle came in, touched that previous high, couldn't break it, and then it reversed, right? Came down, pulled back. So tweezer tops, right? Picture tweezers like those sharp ends kind of thing. Now it's not always going to have two tops like this that you can, like in the other one I showed you earlier, the other one didn't have any wicks up top. The first one did. So sometimes you get two kind of, or upper shadows, whether you want to call them wicks or upper shadows. Upper shadows. I like calling them wicks. So like, candle wick, right? So you'll see on the other one didn't have an upper wick. These two do. So, but again, it's two candles that can't break that high that show that potential reversal downwards. AT&T, or T here for the symbol. Here's another one. Second candle, bigger than the first candle, but if you look across, couldn't break the high. And look, reversed downwards. It fell downwards, right? This is happening. Now, again, these patterns don't always happen when a stock's overextended. This one is kind of hovering right in the middle of RSI. EMAs are trading sideways, and it chose a direction, and that direction was down, right? So you can see, couldn't break those two tops, right? So this one for Verizon, another one, a little different here. Look at this, right? So you got almost like a hanging man and a doji, right? And you can see tiny bit, that candle, that second one, tiny bit higher than the first doji, right? That wick on the top of it is just a tiny bit taller, but look, still basically a tweezer top. Again, look at the patterns, look what it's doing. So you have a doji and a hanging man, right, at the top of an uptrend when the stock is overextended on the RSI. So, you have a doji as a warning sign. You have a hammer, or I'm sorry, a hanging man, looks like a hammer, as a candlestick at the top of an uptrend with a stock that's overextended and it can't break the highs to go up further of the previous candle. There it is. That's another form of something different. It's a tweezer top. And look, it's a tweezer top with these, a hammer and a doji, or a hanging man and a doji candle. I just like calling the stupid thing a hammer. It's easier. But so that's another example of something. It shows you right there. See that line across? Couldn't break above. Boom, it fell and it reversed. Facebook. Here's another one. Stock is moving up. Now, again, kind of like a spinning top kind of pattern here, but look, right? The second candle, kind of flat top, no wick, still the same height as that other one right there. Look at it right over here, kind of broaching overbought. Wasn't quite there yet, but you kind of got that spinning top pattern. Couldn't break that high there. And as you can see, kind of bounced down, went back up, and then fell. Sometimes it'll reverse right away, sometimes it won't reverse, and sometimes it'll just completely tank. You got to just watch. And the last one we'll look at is GM. Another perfect example of sometimes something is not completely perfect. Look at this, bigger green candlestick with a wick, right? Up top, second red candlestick. Now look, if you see that first, there's just a tiny, this red candlestick wick is a tiny bit shorter than the green one. So does that make it not a tweezer top? I mean, it still is. This second candle couldn't break above this one, and it reversed downwards. So this is where, again, we try to teach people when we're teaching them technical analysis. Not everything is going to be perfect 100% of the time. Just like the stock market, no patterns are 100% perfect. Nothing works 100% of the time in the stock market. If there was a foolproof way to never lose on a trade, there'd be a lot more people that are rich. But even the best fail 30-40% of the time. So this is where, again, putting the odds in your favor with trading and noticing and understanding candlestick patterns is very important. And don't get bogged down in the minutia if something's not 100% perfect, because it's not always going to be 100% of the time.